China trimmed its key lending rate on Monday, only 1 week after it lowered two of its key interest rates. The surprise moves aim to revive credit demand and fire up the economy, hurt by both extended COVID lockdowns and property debt problems. China's central bank cut its 5-year interest rate by 15 basis points to 4.30% from 4.45%. And it also lowered its 1-year lending rate by 5 basis points to 3.65%. Meanwhile, European markets remain focused this week on the Jackson Hole Symposium, where Jerome Powell and other central bank leaders will share their views on global growth, inflation, and imminent monetary policy responses later this week. For more on this, let's bring in Naeem Aslam, who is Chief Market Analyst at AvaTrade in London. Naeem, many thanks for being with us this morning. So first of all, we've seen some positive reactions to last week's rate changes, but some analysts are saying these reactions actually are short-lived, and these measures may not really lead to a turnaround in the economy. Are these measures helping at all?
Sure. Thanks for having me. Look, I think it is all about the long-term curve. It is all about the long-term future. It is all about the reputation of the central banks and how they were incapable of controlling inflation and can they control inflation, and how long it will take them to bring inflation back to their normal levels. These are the major concerns among investors and traders. But of course, we are living in an era where the markets are very much addicted to dovish monetary policy. And if you look at the central banks across the world, whether it's the Federal Reserve, whether it's the Bank of England or European Central Bank or any other bank, we are living in a time where these banks have adopted the most hawkish monetary policy. While over in China, the PBOC is still not sure whether they wanted to have a very dovish or very hawkish, so they're still kind of walking on a fine line, because for them, the most important thing is economic activity, economic growth.
Interesting. And meanwhile, European markets are set for a lower open this morning, as all eyes really are in the Jackson Hole Symposium, and especially on Thursday, Jerome Powell is expected to talk. What do you expect from Thursday?
But I think something that I've just discussed earlier, that would be the focus among investors and traders. The Federal Reserve's reputation. How much interest rate hike are we going to really see in relation from the Federal Reserve? Will we see the interest rate going to 4%, or will they be ending at 3.4%? And how long it will take for the Federal Reserve to bring inflation back to its normal level? These will be the key points what investors and traders will be looking at.
Naeem Aslam, many thanks for this update.
Thank you.